Great. Well, I'd like to welcome everybody in the room as well as those online. So we have a number of people who are also joining us online, so that's terrific. So I'm Sybil Sightsinger, the Executive Director of the Pacific Institute for Climate Solutions, and also known as PICS. And this is part of our seminar series that we do, and we're holding it here in this room with some nice light today. So I'm delighted to introduce to you today Zen Makuch, who is here from Imperial College London. And so we're delighted to have him here. I'll just say a few words about Zen, because if I went through everything that he's done, we'd be here for more than the hour that we have today. So just a brief background, and you have some also in the announcement. But he received his PhD in International Trade and Environment, and LLM, or Masters of Laws, in International Economic Law and Environmental Law. He holds many positions. Just one is the Director of Food Systems at Imperial College. And he really is a leading interdisciplinary researcher in the implementation of international climate change regulation and policy, not only within a European context, but really internationally. He's really known around the world. And I emphasize this interdisciplinary because if we look at sort of the range of topics that he's published on just within the last year or two, it goes from the foundations of environmental law to quantification of risks associated with geological storage of carbon dioxide, to the water footprint of data centers, to citizen science. So I think we're going to have a very interesting and entertaining presentation today, and he's really going to talk about regulation and policy in a risky world, and what are some of the things that we can do to address that. Thank you, Zen.
That's super. Thanks, Sybil.
Over to you. I think I'm going to, do I turn this off, or do I, leave it? Leave it. Yes, absolutely.
So just while we're making the transition, I wanted to thank Sybil, but also Nancy and Stephanie for making this run relatively smoothly, and I hope to be spending a little bit more time at UVic in the future. We'll see. The other thing I should say is that although I have a legal background, I'm actually breaking the law by standing here right now because I'm what you call a Brexit refugee. So as soon as Brexit happened, I knew that was it for me. I'm going somewhere, and it's probably not going to just be England. The next thing that I should say is the following. Lawyers and the legal method is not necessarily connected to interdisciplinarity. And so some of what I'm going to be trying out with you today is theoretical and speculative. And part of the reason that I'm doing that is because following an interdisciplinary scientific method, which is sometimes alien to people with legal backgrounds, I'm convinced that sound science-based risk assessments should inform the way that law and policy are made across the board. So I'm converted to this scientific method, and you'll see that I make a major proposition which suggests that almost all regulatory and policy measures really ought to follow sound science-based risk assessments. And you'll see that if you even casually look at the design of legislation over the years, there are so many examples of where that's actually not the case. In Europe, a risk assessment, which wasn't a very scientific risk assessment, became the basis for the creation of a directive which unknowingly created the extinction of electric vehicle manufacturing in Europe, all right? Because what it did was it regulated a battery chemistry which was unique to the design and, of course, sale of vehicles made by Renault and Citroën. So that meant that the EU created regulations without even taking account of the market in which cars was being produced. We also see that in respect to the Floods Directive. I'm going to talk to you about that a little bit later. Now, what kind of journey are we going to go on here? I'd like this very much to be a seminar-style kind of presentation. So we'd do some of the initial notes, and then going back and forth on some of the fundamental propositions is something that I want to learn from you about. Okay, so then having said that in terms of introductory comments, let's get into the meat and the potatoes. And I'll talk to you a little bit about structure first. Oh, incidentally, that's the baseline for my last presentation, so you don't look like that afterwards, then you've done a good job, and hopefully I have. Yeah, true. Okay, so the way the presentation is going to go is I'm going to put forward a few fundamental propositions about how law and policy should be made. Once I do that, we're going to take a look at a couple of case studies. One of them is in relation to flooding. And that's flooding in the UK, but within the framework of the European Union. The other one I'm going to look at a little bit, though I would claim that all of you have more expertise in the area than I do, is the way that we deal with forestry policy, fuel management, and the like, and how we deal with risk and risk spreading there. And then once I get through that part, I'm going to talk about some work that I did with the European Union in which we started to think about the role of insurance and other financial risk instruments. Because I believe that the future of regulation and policy in the climate change space will depend upon developing a much more sophisticated approach in that regard. And despite the fact that I'm wearing a suit and maybe I look like an insurance person, it's my only suit, sorry. The point is that I'm actually a convert. And the reason I'm a convert has nothing to do with the fact that I want to become rich in the insurance business. It has everything to do with the fact that universities and the kind of science in big data and our ICT capabilities are such that we can actually act as a watchdog or a check on what insurers do and what banks do. So I'm not as afraid of insurers and bankers as I used to be. Plus, the recent experience of developing an insurance product and putting that product on the market also tells me that some of my colleagues at Imperial have a pretty good angle on how insurance is done, and we've shown them ways to do it better. So I think that university communities will be a check on profit-taking, profligate profit-taking, if we move forward in the direction that I'm talking about. Okay, so next bit. Having been at a major interdisciplinary university that is informed by world-class science and engineering, and of course we don't have a monopoly on that, I would say that this is the base, this should be the base for regulation and policy in the environment, climate change, and low-carbon energy spaces. And these are areas in which I work, so I won't claim that that might be true for other areas. Nevertheless, it seems to me that these disciplines, and I suppose one could add medicine, form a disciplinary basis for the way that we should draft and implement regulation and policy. And in the climate change space, because political will stands in the way of an enlightened approach to climate change, and I think this is the main barrier other than our consumption attitudes, because that stands in the way, looking at the regulatory space and changing the way we do that is of fundamental importance. And in order to make this happen, we have to do that on a cost-effective basis, so looking at financial risk assessment is fundamental to that. And let me just advance one proposition. The way that firefighting, the way that work in the forestry field, the way that compensation for damage takes place, and let's not forget, right, the sort of damage that's done in BC forests is damage that is long-lasting, and it affects social sustainability, economic sustainability, and environmental sustainability. That conundrum is really a form of crisis because it creates roller coasters in governmental budgets. So one of the fundamental propositions that I'm advancing is that getting this space a little bit more involved helps to level out the way we do that. I don't think governments can really budget plan in the midst of these kinds of cycles of damage expenditure, or what we could call government relief in the insurance sector. Okay, so thinking about risk for law and policy, this is how I'm thinking about it. Okay, so moving on. Is there a basis for that? There are a lot of things that I learned in the international trade field by being an international negotiator for a few countries and litigating trade and environment cases. And most of it was negative because essentially international trade regulation, the globalization that goes with it, doesn't really deliver for most people. Okay? It delivers for some people and some firms, but not for most people. And that is fundamentally because it doesn't deal with linkage issues. So you have international trade as a philosophy that's underlaid by laissez-faire economics. And what that kind of libertarian approach, libertarianism, the expression of laissez-faire or Friedmanite neoconservative economics, what that does is it protects those who benefit a great deal from trade, but it puts a lot of people out of work. And it also is highly damaging to the environment. However, there's always something that you can find when you're working in the field. And in this field, what I learned was that, in part by negotiating some of these agreements, sound scientific risk assessment became the basis for the way we design regulation and policy. Okay, so what the WTO system mandates, what NAFTA mandates, What a number of regional trade agreements mandate is the notion that when you make regulation, it has to be based on sound science in a risk assessment context. Most people don't know that. And governments have been very slow to implement it. Yet you know how many countries there are that belong to the WTO system. And so my prediction, and I think this is the right way to go, is that sound science-based risk assessment is a smart way to deal with technical regulations, as this highly complex agreement says, the Technical Barriers to Trade Agreement. And the same thing applies to health and plant health measures. Health and plant health measures, okay? Sanitary and phytosanitary measures agreement. So risk assessment affecting human or plant health and the environment, sound science and risk assessment in that regard is the basis for regulations that comply with these systems. And incidentally, for those that are interested in investment law, international investment law, the round of investment agreement negotiations, TTIPs, Canada-EU agreements, agreements between the United States and the European Union, they all have the same sorts of rules in place. Okay, so we know that mandate exists. Now let's go to case study one. Okay, so I'm pretty familiar with what's been going on in the UK, and there are some really shocking severe meteorological events that have taken place, but also shocking governmental reluctance to do anything about them. Conservative parties don't like to spend lots of money. They like to reduce taxes. They like to spend the revenue that they gain on some of their friends and certain favorite industries, but they, by and large, don't deal with some of the key issues, of which flooding is one. And the reason flooding is so important in the UK context is because the 1 in 100 year flood events, which is the basis for flood mapping, they've been exceeded 4 times since the early 2000s. Okay, so we've had 4 1 in 100 year events. And most of the science points to climate change as an exacerbating factor. And yet, governments have actually reduced the investments they've made in flood management infrastructure. And I would suggest to you that's illegal, actually. In the same way the UK government's being taken to court for not observing European air pollution law, they're doing the same thing with flood management issues. So what is it about flood management that they can't get to grips with? All right, so this is an example of the opposite situation of the one that one would like to see. First, governments are not relying in the UK on other actors in order to deal with risk spreading and to bring their expertise to addressing flood management issues, okay? But what's worse in the UK is that in addition to the government maintaining a monopoly position on what you do in terms of flood management, one which they don't ask water companies to do much about, you also have government reluctance to spend money on infrastructure planning, okay? So you have these two problems in this context. And what are some of the results? Already, the government is in a situation where it has to explain why 175,000 homes are worthless. And at the same time, it's continuing to insist on development in floodplains. In fact, 30% of new development in the United Kingdom is taking place in floodplains, at the same time as no money is being spent on infrastructure. So this is a disastrous situation. It's disastrous in part because government hasn't even involved or exercised any kind of authority in terms of the relationships with the insurance and reinsurance sector, who are a fundamental part of the solution in this area. Okay, so we have this problem. And a couple of the recommendations that I've made in the context of the National Adaptation Program, which is a requirement under the Paris Agreement and under international climate change law, are to extend the risk for people who live in floodplains because they can't shoulder the burden of the premiums themselves. And let's face it, I'm a social democrat, I'm a Canadian, and so those kinds of values suggest that we need to spread risk if societies are to function properly, in the same way that we try to help people who may be less fortunate than us. So Flood Re is a suggestion that was made out of my office, which effectively results in premiums being spread across all homeowners in the UK. That way, by paying an extra $16, I'm using Canadian figures for all this, $16 a year, we're finding ways to deal with people who are living in those floodplains so that they can afford to continue to live there and they don't become homeless, okay? Properties become worthless in the UK when they're in floodplains because there's nobody that's willing to insure them. Government didn't get insurance involved in that, the insurance sector. And you can't sell that home because nobody's going to offer you a mortgage on such a house. A bank will never offer a mortgage in those circumstances. Okay, so then the other area that we've worked on is we've explained how R&D budgets, but also just spending on improvements to the Thames barrier system, which, if breached, would cost 12 to 15 billion pounds. All right, so we're talking not very far away from $25 billion in losses. And we came very close to Thames barrier breach just 2 years ago. And then, of course, we suggest that environmental impact assessments, strategic environmental assessment procedures, they have to be in place with respect to future planning around uses. And we should really try to avoid building in floodplains. So you have this crazy situation in the UK with floods, and I don't understand why governments aren't actually suffering in the ballot box over issues like that. Now, Sybil's going to have to forgive me because I presented this slide yesterday. I was asked to take a little closer look at what's happening in the forestry sector in BC. And the first thing that I would say is what a fantastically successful sector it is in the sense that firefighting is the best that you have in the world. I learned that actually BC firefighters have 12 client countries elsewhere that they advise on firefighting. They're that good at it. But of course, that creates real fuel management problems. And so we all know, right, that nature's cycle for dealing with fire has a process of thinning which doesn't create these sorts of red area threats like we have here. So what I started to try to understand is from a scientific risk assessment perspective, how do we deal with fuel management? And again, some excellent guidance documents from 2015. This one actually is a depiction of 3 variables or criteria that come into play in terms of determining fire threat. Okay, so variable number 1 concerns the mapping of fuel types, of which there are about 14. So the fuel type mapping is done, and then we look at areas that are buffer zones, where there are developments or conurbations, which affects the threat mapping, and then finally you see these numbers here, which all refer to years in which fires took place. 3 criteria. From a scientific risk assessment perspective, I think it's excellent on those terms, but I get a little worried because there are other factors that aren't brought into play here. And so this is why, in addition to looking at some of the fuel loading, flammability issues, the nature of the development presence, which is getting larger, needs to be characterized in some way. Human activity types should be characterized. The vulnerability of the landscapes, but also there's a disconnect between forestry management and particularly fuel management policy and carbon, because the risk assessment doesn't take account of the loss of carbon sinks, carbon sequestration capacity, and the result of that is that carbon is marginalized. So you have a same linkage problem that you get in international trade law, which isn't connected to environmental law. So there's a fundamental need to connect forestry policy with carbon strategy. And this isn't something that I really need to be saying to this government or indeed the previous government, because you have carbon pricing. And this is what makes you one of the most progressive jurisdictions in the world. So this seemed to be a problem. And then the other problem that I spotted, although this is probably a no-brainer, you all know that, is that in effect, government self-insures in the forestry sector. And it's not entirely clear to me why that's the case. Because as soon as Premier Horgan came into office, he got a letter from the insurance industry on the 30th of June. And that letter said, hey, can we start working with you on disasters, disaster relief management, and fires? So the Insurance Bureau of Canada, a number of insurers are involved in that, some conservation NGOs. And they've said, can we start working together? And I think that makes a lot of sense. And the reason that I think it makes a lot of sense is because my last case study is going to show you how a group of us at Imperial College developed an insurance product which the world's leading reinsurers and insurance companies have taken up with significant behavioral changes and benefits. And I think that university researchers are actually in a place now to support Premier Horgan and future governments in tempering how insurance, private sector insurance, is brought back into this game. Insurance and banking, actually. And this is in part because what we're using is cutting-edge technology in the ag sector, and you could use this in forestry as well, are satellite technologies that allow data points of a meter squared. All right, we do that so that we can understand fuel growth, food growth, okay, crop growth. And then the other bit of it is that there are a lot of portable sensor technologies that are very low cost that can be implemented in ICT data networks that can see what's happening below the canopy level. You can examine a number of variables in respect of the moisture content and other factors in the soil, in the trees, and the surrounding vegetation. So it seems to me that it's time for us to get involved in this kind of work and to have universities keeping the private sector honest. Okay. Information and communication technology? Where'd the ICT guys go? Yeah, I think that's, sorry about that. Okay, fine. So just a couple of other components. Okay, so component number one. I was lucky enough to be asked to be part of a team that started working with the European Commission on how you think about financial risk instruments and insurance in the context of natural disasters. Now, why did that happen? Because it came to the attention of the European Environment Agency that the cost and frequency and size of natural disasters has been increasing quite significantly. All right, and so this is a circumstantial kind of connection to climate change related problems. So you see a significant increase taking place, almost a doubling over the period of a matter of just a few decades, really. In the number of events, climatological events, okay, are also growing in size. Okay, from these smaller sizes here to these larger ones, all right? And as well, the Commission is now persuaded that even specific events, the heat waves and the fires in the European Union, have been satisfactorily shown to be based on climate change. So event-based climate change causal relationships. Okay, so you see this situation. So a couple of us, including Mike Foray, we said to the Commission, you really want to start thinking about how you're dealing with insurance and other types of risk instruments. Okay, and so this is basically an articulation of what I just said. Getting a lot more and different types of intense events that are causing catastrophic damage. And not unlike things that are happening here. Fires, floods, but also earthquakes. Okay, so in terms of the weather and climate risk issue, this question about the unavailability of insurance is a real concern because effectively governments become their own insurers. And the only insurers that I know of in the world that self-insure are the oil and gas industry, all right? And this is because of the record amount of profit making they've had over the years, so they can actually afford to absorb those losses. I'm not so sure that's true with governments. And that's why I think it's time for governments and the private sector to work more together using the very sophisticated risk assessment methodologies and techniques that you've seen developed in the insurance industry. They're bread and butter for 200 or 300 years. Okay, so what else have we got? Let's start talking about solutions. You have challenges with some types of issues like major disasters like earthquakes, and because they create damage across a whole range of different kinds of effects. But if you don't bundle insurance together, then you don't really risk spread in terms of the types of events. And so the strategy for bundling insurance together, so you're basically paying for, fire, theft, flooding, earthquake. You can do that on homes and properties. The reason that you do that is because it's very likely that not all of those things are going to happen at one time. And that way, financial markets have a flexibility to provide insurance, knowing that they won't have to do payouts for all types of events at once. So bundling insurance is a very sensible strategy from an economic perspective. So bundling insurance is one. Another one I think that needs a really close look is risk spreading. Okay, so we talked about risk spreading in terms of fire, flood, theft, and drought. But the other risk spreading option is to try to do risk spreading which involves everyone having insurance policies. Okay, so one of the problems that you have with insurance is that you get risk myopia. Lots of consumers don't have insurance when they ought to have it. And you also have something called adverse selection. Those who are highest at risk are the ones that are seeking insurance. And if government's there to provide relief in all circumstances anyway, then why would one even think about taking out insurance? And if one doesn't think about taking out insurance, then the result is that you have significant losses that have to be picked up by governments. This is also a complaint about Obamacare, but I'm a big fan of Obamacare. So this kind of risk spreading, administrative cost reduction, and reduced government relief that would attend a compulsory approach is, I believe, in a societal interest. So spreading risk through compulsory insurance makes a lot of sense. It also can incentivize proactive behaviors like fire smart, which I think ought to be mandatory. Okay, and so then some of the other slightly more sophisticated approaches that are used include creating risk pools. Okay, so disaster insurance pools are a very smart way developed by firms to deal with various types of disasters because those pools allow large numbers of insureds to come together to make investments in pools so that you have a kind of sinking fund available in the event that a disaster occurs. And this is an approach that is used for oil and gas spills. So in the oil and gas industry, in respect of all spills that take place at sea, the oil majors and the governments that own large oil resources, they contribute to an oil spill fund. And so when oil spills take place, that finance is available. So these sorts of disaster insurance pools are supplementary to some of the other suggestions that I made along with Michael. And then just a couple more. And this is going to be the last part of the presentation when I start talking about food systems and risk. Universities are, for the first time, in a position to be able to do the data gathering and modeling that was traditionally only reserved for the insurance industry. And this has to do with the sophistication of our information communication technologies and the sophistication of our modeling skills. And I didn't really believe that at first, but now I'm saying it based on an empirical experience, all right? I didn't believe that at first. I thought, you know, a lot of proposals that I've seen come to me when I'm doing a kind of an engineering physical science research council review, they're basically for modeling activities that will have journal-related outputs, but not much impact in society. But what we're seeing now is something a little bit different. And parametric index-based insurance schemes are a perfect way for us to be involved in the insurance sector because what they do is they allow us to take data, let's say weather data, to analyze that data, and when there isn't enough precipitation in a particular region, let's say where crops are grown, if there isn't enough precipitation over a growing season, that results in an automatic payout, okay? So this kind of data analytical-based approach is actually much more economically efficient than insurance companies have ever really done before. Because as you know, if you have car insurance, the level of insurance that you pay depends on how you are classified as a person, but also based on your behaviors, okay? So dangerous driving behaviors, accidents, those all have to be mapped at the level of the individual, and it's extremely expensive for a company to do that for every single client. Parametric insurance schemes don't require consideration of behavioral issues at all. That's an automatic 30% saving. So using this parametric approach is a smart way forward, and I'll show you a little bit about how we've done that. And then finally, let's not forget that these kinds of risk management behaviors that attend insurance can be very positive as well. So building risk management behaviors into the design and implementation of these data analysis and modeling schemes that lead to insurance instruments give us an opportunity to develop all of this new work. And I dare say that it's an enormously growing field. And over the longer term, investing in risk management behaviors and through risk spreading to a range of stakeholders is in the interest of sustainable economic development, which is why I strongly advocate working with lots of different stakeholders as academic researchers. Okay, so the last one is going to take 3 minutes. This is the last case study. Okay, so one thing that we noticed, yes? I don't know, I'm not the chair. I guess that's okay.
Yeah. Before we go on to the next one?
Yeah. So I'm trying to figure out, insurance is individual based, an individual loss, individual health. Now the insurance you're talking about is group or locality or population based. So in that scenario, why would the individuals be responsible for insuring themselves against a social disaster? For example, war. Who's responsible? Do we give insurance for waging war? That is a societal responsibility. So how do you reconcile the two?
Okay, good. So you've been listening very closely, and this was a worry of mine because I was getting into a level of granularity of detail, and you notice that second slide about people falling asleep, and it's insurance, I'm going to fall asleep. But I'd like to avoid the kind of war scenarios because I normally just get upset and angry when I start talking about war and who's responsible for that and how the UK is the second largest defense industry in the world and all that sort of stuff. But this case study I'm about to show you answers that question, okay? So you've asked a very astute question. It's one that I'm going to follow through on with this answer. Okay, so you are right to say that by and large, for the examples that you've given, put war aside for the moment, insurance is based on a relationship between you as the insured and the insurer, and that your behaviors have a determining element in respect of the premium that you pay. And this is why I use auto insurance as an example. We all know how well that's doing here in British Columbia. So this situation that I'm describing here is exactly as you characterize it. What we do is we use relatively sophisticated data gathering techniques, and we validate those through on-the-ground sensing and monitoring. And the World Bank's been nice enough to offer us those services for the next 5 years, but for a philanthropic reason. We're helping smaller farmers, okay? So to explain how parametric insurance works in this context, let me just make a couple of comments that actually answer the question. Okay, so the way that we design, now here we're moving to something different here, all right? So for this particular case study, let me just make a couple observations. The situation that we saw and that we found was as follows. This world produces 60% of its agricultural outputs, and that's a conservative estimate, through the vehicle of smallholder farmers. I never knew that. I thought it was agribusiness. But smallholder farmers on plots that are a couple of acres in size, and a lot of them are really poor, are basically a driving force in terms of the world's food production systems, and that's remarkable. Now, the second part of that is, by and large, many of those farmers are subsistence farmers, and the reason they're subsistence farmers is because they don't have access to credit. Part of that has to do with the fact that they don't have the collateral that all of us have when we want to buy houses. They don't have the collateral that we have in our cars, which justifies insurance companies giving us insurance. All right, so they're broke. And so the challenge that we faced was to try to create support for smallholder farmers at the same time as we're advancing the cause of food systems. And you'll actually see developed countries are very interested in this for another reason. So how do you deal with that? The most important thing when you're trying to help farmers in these circumstances is to be able to provide them with a payout which is enough to keep them going for the next year. So they can get loans for what we call inputs, fertilizers, pesticides, improved seeds, okay? That's what they need. So there's that threshold. And because we're pretty good at modeling crop pricing from season to season, and we have some idea of what sorts of payouts they need to make in order to keep them going, we create a correlation between that and the premiums that they have to pay so that if climate-driven or other weather events force their yields below this level, they get an automatic payout across the board. And of course, we weren't very confident about this at first. We didn't know that our modeling work would really result in being able to determine where that line was. But Munich Re and Willis Re and let me see, a couple of the other insurance companies. One of the other ones is AXA. They said, hey, you're onto something. This stuff works. So the way that the mechanism works is that if you have climate or other weather-driven events that bring your yields below this amount, you get an automatic payout. Okay? So there's no behavioral component at all. But in my last two slides, I'm going to explain how we built the behavioral component in, because you can have parametric insurance along with the standard indemnity insurance scheme like you get for auto insurance. And so here, let me just explain. Okay, so what we get with food systems, we have uncertain futures because of production collapses. Medium-term yield losses have been rising for years and years and years now, and you get food spikes, okay? And that has a lot to do with extreme weather events, climate-driven. Okay, so this is the relevant scenario. And because I'm more interested in hearing from you than you hearing from me now, I'm just going to skip through to a couple of slides, and that'll be it. What we did was, as university researchers, we realized that working with all of these agencies was fundamental to being able to develop an insurance vehicle. And so we went out there and we structured all these relationships. Hard work. I'm spending a lot of time in Africa talking to these people, trying to convince them that a bunch of university nerds know what's going on in the insurance world. So we did that. And so essentially what we've done is created the parametric insurance that you've talked about. We convinced Munich Re to be the reinsurer for that. So what that means is if the insurance fails, a reinsurance company will come in and cover the costs, okay? And those are not small. And the reason Sainsbury's, which is a major supermarket, is involved is because Sainsbury's learned that they get about 80% of their produce from overseas, places like Africa and Latin America. So they have enormous exposure problems in respect of climate-driven weather insurance problems, just normal weather insurance problems as well. And so parametric insurance makes a lot of sense for them so that they can de-risk their supply chains. Because they have 20-year contracts for agricultural products, okay? Pick a simple example. In Ethiopia, if a particular river basin is subject to a change in use because the relevant prime minister says that, then Sainsbury's loses 80% of its flour market, as does the rest of the UK. Okay, so that's why the supermarkets are interested in these. Are input providers. These are companies that sell fertilizers and improve seeds. That's the last part of the story. And these are the local banks and one international bank, which are providing the loans to the farmers. And so let me just say one other thing. We're not talking small numbers of farmers. The pilot that we did was 20,000 farmers. And off the success of the pilot with 20,000 farmers, this next growing season we are doing 200,000 farmers who will be insured. Okay, so just to finish, the behavior component. We weren't really happy just having parametric insurance where you can accurately draw the line and determine the payouts and for the first time bring farmers back into food systems and promote food security. We wanted to engage in a series of behavior changes, and the incentives are really important. So we wanted to see behavior change, exactly the kind that you referred to. And so by doing that, we drew in other departments in the university and other universities in order to become much better at the climate science component, to engage in financial engineering, because you can create financial investment structures that capitalists, philanthropists from all over the world will invest in to make these products better. Crop modeling, which looks very closely at simple things like moisture presence and growing seasons. Growing seasons are broken into 3 components, and the amount of moisture from day to day is really important. That's a big part of the modeling work. We're doing that with NASA. And then development economists are important, and food scientists, because they tell our farmers how to be better at growing crops. So how does that fit into a parametric or this index-based insurance system? It doesn't normally. However, what we were able to do with the banks was to convince them that if they adopt improved sustainable farm management behaviors, then the interest rates that they have to pay will be lower. And so by adopting a range of strategies that are drawn from our learning in this field, you've got farm organizations competing with each other to see who can adopt the best behaviors. They have the lowest interest rates. It makes them more competitive. And look at all of the changes that are happening now. Last slide. Behavior changes. Farmers are adopting integrated pest management techniques for the first time because they could afford to. They were trained as well. Adoption of more sustainable fertilizers, adoption of drought-resistant seeds, heavily subsidized by some of the big agribusinesses, actually. Governments setting up the regulatory frameworks which favor our approach. Governments creating partnerships with the World Food Program. They're very important. You'll see why in a moment. Banks making loans and partnerships with other banks in order to have more farmers, smallholder farmers as clients. So banks moving forward. The farm organizations are the collectivities, co-ops. You call them co-ops in Canada. Co-ops, new ones being created and getting larger and larger and training farmers. World Food Program has now become a guaranteed buyer for a lot of the crops that are subject to our insurance model. And the insurance becomes the collateral. That's why the banks make the loans. Input providers are also involved offering subsidized seeds, fertilizers, and pesticides because they know they're going to get paid back. And then finally, our insurance is evolving along the lines of the earlier slide that I was talking about. And we're moving 3 markets, and then the plan with the World Food Program is to get us into 10 different markets. Okay, so this is the answer to your question, also the end of the presentation. Please. Sorry.
Thank you, Zed.
Sorry.
We're going to walk the microphone around so that it gets recorded for the people who are
Great.
online, and so that everyone can hear. So, who had the question? Oh, another question here?
Oh.
Great, and then we'll go here. And then we'll go up here.
Thank you.
So part of the solution that
Sorry.
part of the solution that I observed in your last slide, if you can go back to that last slide, was farmers adopt integrated pest management techniques,
Yes.
sustainable fertilizer herbicides, and drought-resistant seeds.
Yes.
Now, where does the type of work that GMO does fit in or not fit in there?
The type of work that
GMO. you know,
GMOs.
yeah.
Okay, so
How does it fit in or doesn't fit in?
you keep asking me the hard questions. Okay, so I should say that in the first place, I don't claim a monopoly of knowledge in any of these areas, all right? So the person that leads on the sustainable agricultural production side and the sustainable agriculture side is Sir Gordon Conway. Sir Gordon Conway is one of the fathers of the Green Revolution in agriculture, and he's been knocking around for 40, 50 years, all right? So what Gordon did, as soon as we got into Tanzania, was he looked at the input models that were being used, and because farmers didn't have any money, they were actually relying on old chemicals from the 60s and the 70s, which are highly damaging to the soil, okay? So the first thing was to get rid of that as a process, and then to adopt new and better techniques in respect of the nature of the pest management techniques, and this was driven by Professor John Mumford, who spent 40 years working in this field as well. The GMOs issue, we've actually avoided that for the time being. We said no GMOs. And the reason we said no GMOs has less to do with the science and more to do with the selling proposition and the politics. Half the world is divided into pro-GMO and anti-GMO, and that's the way the regulatory standards are. So why should we disallow smallholder farmers, right, from having access to world markets in a non-GMO context? Yes? Okay, that's the answer. Yes?
I'll just hand you the microphone, sorry.
Oh, yeah, sorry.
I actually have two questions. The first, well, I don't want to forget about the organic farmer and how that all fits in there. I would imagine that they fit in here somehow. And I was very excited about the program until I saw Bayer there. And I'm not so excited about that. But what I'm wondering is, are the farmers in any way obligated in utilizing these techniques of enhanced seeds, et cetera, in order to be able to have insurance or be compensated?
So short answer is no. We didn't involve those firms in the pilot, all right? So in respect of Bayer, it's the foundation, not Bayer, the firm. And then I suppose that in the context of the Syngenta comment, GMOs, right, they're very GMO-oriented. We said no to Syngenta in respect of those aspects. So we did a basic risk assessment of what was on offer. And so Sir Gordon just said no. On the organic farming side, we're taking time to get up to speed because we're trying to reverse 50 years of bad farm practice. Okay, and so in some of the markets that we're already involved in, we're doing our best to support organic farming. And in fact, organic farming that's taking place in sub-Saharan Africa is already strong. It's already standing on its own 2 feet because of the premium that comes from selling organically grown produce. Okay, so they don't actually need the help of the program. They're doing really well already. But we will try to transition to more organic farming as the program develops. Baby steps, sorry.
Here, Lee, let me give you the microphone here.
So I have a question actually about insurance instead of genetic engineering and organic stuff. So my concern is that car insurance and health insurance, at least in Canada, are treated very differently in that quite happy to leave the car insurance up to the market, whereas in Canada we've decided as with most other Western countries, that this is something that is simply too important to leave up to the market. And so we're publicly insured. And how this relates to whether insurance in the market should be the driver of behavioral change. We definitely want to see behavioral change in both better drivers and more healthy individuals. But we've made a decision as a society that the way that we're going to try to enact better, more beneficial health behaviors is not through the market, through being more, if you're fat, you're going to spend more on your health insurance, as they do in the United States, because we just decide, that's just not fair. We have a similar surely we have a similar situation internationally where if those regions that are at disproportionate risk through no choice of their own, the parts of the developing world will be at much greater risk than the developed world in terms of climate change. But they're going to have to be spending a lot more in terms of their insurance, and if we're going down the road of catastrophe bonds. And you're hoping that that will drive some sensible behavioral change on the part of these countries to be better adapted to those conditions. But the cost for them will be much higher than for us in the north. So is there not another option rather than placing the burden for insurance on the developing world, and instead use climate finance transfers from the developed world to the developing world instead?
Okay. Wow. Okay, so I think there are 3 or 4 that are embedded in that. Okay, so let's start with the car insurance, health insurance situation. I wouldn't tamper with that because it's also very much behavioral driven. So parametric insurance wouldn't work for that at all. And then let's move on to the next point. What I'm not advocating is I'm not advocating private sector solutions. All right, I don't believe that the private sector left to its own devices for the delivery of fundamental public policy aims makes any sense at all. And it's for years now that I've worked alongside firms, I don't trust them, okay? And that's not a nice thing to say. But there is this problem that economists call asymmetric information. So the way that they do the analysis, the way they make calculations about premiums is not transparent. And in the absence of that information, we can't keep them honest, okay? For a situation like this, we're faced with a proposition where government's not doing anything in sub-Saharan African states to support smallholder farmers. So the option is status quo, leave it as it is, and there was an enormous famine in East Africa this year, and governments seem to look the other way on that one. So status quo, government does nothing, or government gets involved in public-private partnerships with maybe organizations like the World Food Program. And in those public-private partnerships, anything that's done by the private sector is kept honest by access to data and the data analysis and modeling techniques that are fundamental. So this is part of the solution. Would I say much more beyond that? You got to just think about government as having one of possibly 3 different roles. Okay? Sometimes what governments can do is governments can just become a kind of reinsurer. They will say, let the private sector insurance market work this way, and we will regulate competition, because that's a problem that Western countries have. They don't regulate competition. Oligopolistic conditions exist in almost all financial markets. Okay? And that's just a fundamental governmental failure because politicians go on to be on the boards of directors of finance sector organizations. And it's just that obvious. I know them all. So you get that situation, right? So governments have to think about playing one of 3 different roles. Private-public partnerships in this field, in which they're kept honest by third-party certification from people like us, possibly. The other is the kind of reinsurance role. And then the other one is basically being a funder of last resort. So let private-public partnerships deal with the market up to this point, and then when you get beyond a certain number, that's where you have to have the involvement of government to pick up that risk. And again, a controversial area where that is happening is carbon capture and storage. Carbon capture and storage isn't going to develop in countries that might need it because all of the risk is placed completely on the private sector, the storage entity. And no insurance market will deal with that situation. But if the government says damage above a big number, $100 billion happens, then you can have public-private insurance markets. That's about as far as I can go.
Another question.
Right here.
This is about flood insurance. We've just seen the last few weeks with Hurricane Harvey and Irma, large sections of the U.S. Becoming flooded on the 1,000-year flood, and you made the comment that the U.K. has 175,000 homes in floodplains, but you seem to say that's okay as long as they're insured properly. Are you advocating that we continue to build in floodplains and insure them properly, or do we need to get out of floodplains, and should we not build in the Florida Keys?
Okay, so the short answer is yes.
But how is that going to work with how much money's there now?
The problem in the United Kingdom, a significant problem in the United Kingdom is you've got a predominantly center-right governance structure, and you have for decades, if not centuries. They don't invest in society, that's number one. Number two, they let the market make these sorts of decisions, and they receive a lot of campaign finance from wealthy landowners. It's got so bad now that developers are not putting property outside of floodplains on the market so that housing can be constructed. The average house price in the United Kingdom is unaffordable for any Brit, okay? Because we're talking about not far from $800,000 for a house. And so there's a whole generation that's going to grow up, they're not going to own houses. And this issue about floodplains is just a question of benign neglect. They're allowing that to happen because it's the most overpopulated country in Europe. And because of a process of neglect, we get these situations. Complete mess. Sorry. Sorry, Sybil.
In Manitoba back in the 1970s and 80s in particular, they brought a policy in around Winnipeg, which is a primary flood zone, most expensive flood zone because it's the urban area. And it's all in a flood zone. The whole bloody city's built in a flood zone. And the areas south of that in particular. So they've put in, everyone's heard of Duff's Ditch. And a few years ago, the NDP put a secondary ditch in as well to assist Duff's Ditch to divert the Red River around Winnipeg. And but that means when they put up the dam, you raise the water south of the river for it to flow into the floodway, it floods out all those areas below that. So what the Manitoba government did is it gave money to all the farmers and the people that live down there to dike the villages. And then for the farmers, you couldn't dike a farm very easily, so they basically raised the farm buildings up 15 feet and replaced or moved the farmhouses and the farm buildings up to these higher levels. So they just let the area flood. And if someone wants to build down below, no coverage. You have to, and government assisted you, it assists you once. It doesn't come back and assist you every time you get flooded. And they've had, I don't know, 48, 52, 79, there was one a few years ago, so that's 4. There's probably 500 or 600-year floods that Manitoba's received in that length of time. With the farm thing, just experience again, they had I remember in particular with crop insurance, and that's quite common across the prairies in particular, is crop insurance. And the risk is spread quite wide, but the risk was overwhelmingly assumed by the government.
Yes.
None of them even pretend to break even. And they have to have an awful lot of good years for the thing to get back in solvent footing again. I'm wondering what you think about a system like that, which is basically, I think, manipulated and overly generous, if you wish, and doesn't have a hope of ever being a real insurance program other than as direct subsidy.
So I'll give really short answers because there may still be a question or two. On the flood insurance situation, the first thing that I would say is if they used a parametric insurance-based model like the one that we've worked on, then you wouldn't have that problem. They would be getting the relevant payouts, and they wouldn't be so reliant upon government relief. The second one on crop insurance is, the U.S. Corn production industry, maize production industry, gets $1 billion a year from the federal government, and they overproduce to the extent of 13 times the crop yields that we find on average. So this is a subsidy program. It's just a SOP, right? And it doesn't make any sense at all, as far as I'm concerned.
So we'll take one last question.
I think there was one right here. Okay. All right. Here, why don't I just give you the microphone? There we go.
So you actually touched on this a couple of questions ago. So I might be repeating myself, but, and this is kind of diverting a bit from your discussion on natural disasters and weather-related events, but I'm really curious as to your thoughts and experience on the geological storage of CO2. We're seeing a significant rise in the use of renewables around the world. The Scandinavian countries, even here, Nova Scotia is doing an extremely amazing job. But we're also seeing this rise in teams of people that are discovering ways to work with the CO2 that's inevitably still going to be in the atmosphere, and part of that's carbon capture and storage. And there must be some kind of risk assessment for projects like, if you've heard about the one in Iceland, where they successfully, I think it was, captured and stored 95% of the injected CO2 within 2 years into basaltic rock. So projects like that, that seem to be successful, but also, of course, come with complications like having to find enormous amounts of water in basaltic rock. What are your thoughts on projects like that?
Yeah, I'm going to actually answer that question in kind of a follow-up from the last one, just in one line. Let's also not forget, right, that, and the ecologists would kill me if I didn't remind us about all of this, cycles like flooding and cycles like fires are the sorts of cycles that we really ought to respect. We need to respect nature. And so changing a strategy for flood management, which takes account of the fact that flooding is something that nature provides us with, and we don't spend our time fighting against it like Superman, the same we don't fight like Superman against forest fires, is an inherently sensible thing to do if we're being good ecologists and good ecosystem managers. Now, answering the question about carbon capture and storage, I think the point that needs to be made, which is not talked about very much these days, is that the IPCC baselines energy issues generally according to oil and gas and coal carbon emissions, and that's wrong. The world's changed. We're in a situation now where China's been so successful at producing solar panels that they're at the WTO with the Americans and the Germans saying, you can't produce it that cheaply, that's impossible, that's an anti-dumping measure. So overnight, the price of renewables, even installations become so much lower that we have to stop using oil and gas and coal-related emissions as the basis for the baseline. And when we stop doing that, then carbon capture and storage isn't going to make sense except in states which haven't addressed climate change in the way that they ought to. And that's why carbon capture and storage should be falling away, actually, because it becomes the basis for continuing to produce greenhouse gas emissions, I'm afraid.
Okay, well, with that,